how to use Fibonacci retracement, or FIB. It's a really good tool. It's something that you'll use on every single trade every single setup that you do have. So just make sure you're paying attention, taking notes. This may be part one. I might make a part one, part two, but we're gonna start off very simplistic, and then I'll get a little bit more in detail onto how to apply the FIB. But if you don't have FIB already favorited, what you can do is just come over here to this little box right here, drop down, grab FIB retracement, and just start it. Then what you'll do is it'll look like this. So when you click it and you click here, it'll look like this, and you'll see all these lines with these different percentages. So before I get into how to actually apply it, you just want to go ahead and double click on the actual FIB, just double click anywhere on it, and then make sure that your levels look exactly like these levels. So you want to make sure that your levels look exactly the same. Color wise, you don't have to necessarily worry about the color too much. You can copy the same colors, but percentages and the numbers and the check marks on all these boxes, make sure it is identical. Okay, so I'll give you guys a second to do that real quick if you haven't done that already. Okay, so these are the FIB levels that you wanna ensure you have. Okay, so what are these, right? So every single one of these levels, except for the red levels, so like the 88.6, these are the main ones you want to pay attention to. But the 88.6, the 78.6, the 0.786, the 0.61.8, the 0.50, and the 38.2, and the 23.6 or 0.236. These are all called reversal levels, or price reversal levels, also known as PRZ levels. So how do you use these? And if you flip it like this, so you flip like this point, and then so all these levels are key reversal levels in the market. So what that means is just that the market will be at a certain position, and when it hits one of these levels, it may reverse. So for example, if you have like this here, and let me go ahead and delete that. Say you have the market like it was, the market was coming in, it may reverse off of like that level, or the market may come up and then it may be reversing off of that level. The market may be coming up, you may be hitting that 61.8 and reverse off that level, et cetera, et cetera. All those levels, okay? The only levels that are not the PRZ or price reversal levels are going to be the red, the 100, and then the -27. The -27 and the -61.8 they're green for a reason, because those are going to be like your take profits, these two areas, okay? So, but the main price reversal levels, like I said, that you want to focus on is the 88.6, the 78, the 0.786, the 61.8, the 50, the 38.2, and then the 23.6, okay? Those are the main levels that you want to focus on, all right? So just keep that in mind as we go about this. Now, before I get too in depth into that, I want to just go ahead and show you essentially how the FIB is applied, and how you use the FIB, how the FIB is just applied to the market, okay? So let's just say you're looking for an uptrend, right? Looking for an uptrend, and you have something to this effect, right? So based on structure, we had a break of a resistance level right here. Right there is a break of the resistance level. Let's just say we had like a higher low, whatever. But as long as you have the break of and we're looking for buys. So let's just say we're in a bullish market. We just had a break of a resistance level and we're looking for buys. At that point, what we're trying to accomplish is a PRZ pullback. Okay, you're looking to see where the market's going to pull back, because I'm looking for a buy. Let's just say we had the daily. Let's just pretend we're on the hour chart. But the daily was bullish, the 4 hour was bullish, the 60 minutes bullish. Everything's good to go. I'm looking for a buy. Okay, I'm looking for a buy in this market. Once I had a break of that resistance level, I would have known, okay, we had a break of that resistance. One second. We had a break of that resistance. And so once you had a break of that resistance, that is your cue, or your heads up. Okay, I had a break of a resistance level. I'm looking for the pullback on this potential buy somewhere in this area. Looking for a potential buy now to keep running with the market. Well, this pullback, what's happening in the market is it's coming down and it's hitting a FIB PRZ level. That's what's happening in the market. So when you see that, that's really what's going on. So what that means is your job is to find out where and how deep the market is going to retrace before it gets back into this uptrend. So sometimes you'll have the market do this and it'll do a quick one like that and then keep going. Or you'll have the market do this, do this, do this, and then it'll come down and it'll keep dropping, and then finally do it, right? Sometimes you have the market do this here, breaks out here, does a quick one, breaks out here, does a quick one, breaks out here, does a quick one. And then finally, after like multiple small little dips, it comes all the way back down and then catches its flow. Our job using the Fibonacci retracement is to identify when that actual Fib retracement level is going to happen. Is it going to be like this? Is it going to be a quicker one like this? Is it going to be a little slower one like this? That is why we're using Fib. That's why we're using the Fib, to identify where that market is going to be officially pulling back down to, so we can make that trade happen. Like, when is it going to happen? Okay, so right when you have the market break out of this Fib level, so right when it breaks out of this resistance level, you're going to go ahead and find your point A, and then the next step is you're looking for your point B. Okay, so point A is established once that resistance level was broken. Then you want to find point B. Okay, so how does that look? So I'm gonna do this in real time. So we have this market right here with the Fib level. So we grab point A, and you're trying to find point B, okay? Now, just because the market has broken out of that resistance level and it's sitting right here does not mean you have confirmed that is going to be your point B. You have to wait until the market does two things, in my opinion. Number one, you have to wait for it to start to trace back down. But then number two, you have to wait for it to break the 23.6. Earlier, I said that those are all the levels you want to pay attention to. The 23.6 is called a continuation level. So the 38.2, the 50, the 61.8, the 78.6, the 88.6, these are all price reversal levels. So what that means is, again, the market comes down here, it may hit the 38.2 and reverse. It may come down to the 50 and reverse. It may come down to the 61.8 and reverse. The 78.6, it may reverse there, or it may come down all the way down to the 88.6 and then like 88.6 and then reverse. If it's coming down and hitting the 23 and then it does this, what this means is that it's hit a continuation level, because a 23 is not a true price reversal level. It's just a continuation. So I cannot establish that this is my point B just yet. What do I do if the market comes down and hits a 23 and then continues up and like creates a new higher high and breaks another resistance level? I have to modify my Fib. I have to bring my Fib along with that ride. So again, the market came up, came down, hit the 23.6, and then it's coming back up. I have to go ahead and do this, and boom, now we're here. Okay, so now I think that may be the point B, but that's just where I've modified the Fib. Let's just say the market came down here, hit the 23 again, and did this. I can't look for buys. I'm not looking for buys here. I'm not looking for buys here, because those are not true PRZ levels. These are just continuation patterns. So then if the market did this again and hit the 23, I still don't have my point B just yet. I'm going to modify that Fib. Important point to make, once you've established your point A and it breaks that resistance level, you don't have to move your point A, okay? This is set in stone. This is good. So I'll change this. I'll keep that blue, and I'll change this to yellow, like caution, proceed with caution, because you don't know just yet if that's the actual PRZ level just yet, okay? So came down to the 23 again. I'm going to modify my Fib. Modify the Fib right there. Boom. Okay? So now what we're looking at is we're seeing the market has done another one up to this level. We don't know just yet. So let's just say the market came down. And before I move on from that, another good little tip that you can always use is, once you're having like these markets hit 23 levels, you see how they're creating like higher lows and higher lows. You can draw like a little random line if you'd like. like right here. You could draw like a little random line right here. And then another one right here. As they're creating these 23 levels, just to kind of give you like an idea of a support level that maybe the market may be creating. I'm not like dead set on doing that every single time, but that's just a tip that you can use, because a lot of times what will happen is the market will come back down and then maybe respect this, and you have like a nice little double bottom pattern forming, or it may drop down to this other one and now you have another nice little double bottom pattern forming. So that's a tip you can use. I use it sometimes, it just depends on market conditions, but just a little tip there. But let's just get back to FIB, okay? So let's just say that we have now our point B, we've modified our FIB a little bit. Our point B is now looking as if it's going to, it's breaking past the 23. Okay. Once I see the market, has broken past that, it's starting to break past the 23, what I like to do is just grab a little alert. I might put alert on my phone and just see. Because now the market's moving past that 23 level. And so I'll grab an alert, and I also will know that because the market's breaking past the 23 level now, it's no longer respecting it and doing that, so I don't have to modify my FIB anymore. Because it's breaking past the 23 and moving down, and say it did that and it was in this range, moving close to the 38.2, I now know it has broken past the 23, so it's no longer respecting that continuation pattern. It's broken the 23, so now it's moving down into a price reversal level, a PRZ level. So at that particular point, when I see that, I now know that my point B is concrete, and I don't have to worry about modifying my FIB anymore. Now I know this is the FIB that we're in, and that's the FIB that we'll be using for this particular trade. Okay. Okay. So now the market's coming down. So let's just say the market came down here and hit the 38.2. At this particular point, let's just say I'm on the hour. When it comes down to a PRZ level, the next phase of understanding how to enter the market using FIB is when it gets into these levels. I know we're on the 15-minute right here for this chart, but let's just pretend we're on the hour, right, with this example, or on the 30-minute, whatever. Like the hour to the 30-minute are the hour and the 30-minute are the two main time frames you will draw your FIB on. Okay, I just want to make that point as well. But let's just say we're on the hour. Okay, if once the market got down into this 38.2 range, because this is a true PRZ level, 2 points. Number one, do not fall in love with any one of these PRZ levels. The market can retrace off the 38.2 and go up here, or it can maybe consolidate and then drop further. Oh, I'm gonna always buy the 50. No. The market could consolidate here, drop further. The market could consolidate here and drop even further, and then finally go. But if you're just like, I'm only going to take trades at the 38.2, I'm only going to take trade at the 50, I'm only going to take trades at the 61.8, you're going to lose, because you have to identify what's happening at these levels to confirm that you want to enter the market, to actually confirm if you want to enter the market. So what I would have been doing right here is, at this level, I would have been breaking down lower time frames, okay? I would have been breaking down lower time frames, and we'll get into this when we have like the full like examples. But in this area, what I would have been looking for a buy, I'd have gone down to lower time frames and just said, okay, what's going on lower time frames based on structure. So in this area, are we seeing structure breaks, and then we're looking for entry base points right here? Is that happening on like a 15-minute or a 5-minute? If so, then this PRZ may have been respected, and it's going to shoot up. If we're seeing higher highs and higher lows and breaks of resistance, all the bullish confirmations in terms of structure. If I came down to this time to here, and I was on the hour with our FIB, okay, it's hitting at 38.2. Let me go check lower time frames. And on lower time frames now, I saw maybe something like this. I saw like here, and then here, and then I saw this, and I started seeing like break of support, lower high being formed. These are all bearish signals on lower time frames. So that means what that would have meant for my FIB is that it means that FIB might just be going deeper. And then once I got to the 50 level in that range, I would have looked for the exact same patterns. If I saw a similar pattern on the lower time frames, that means the FIB is probably going to drop deeper. Until I started seeing like a higher low, then a break of resistance, then a pullback, then another higher low. Like these, if I started seeing this, in this area, this on the lower time frames is giving me a signal that the market may be getting the momentum to shoot back up, okay? Excuse me, give me 1 second, guys. I gotta go to the restroom. Just give me 1 second. Okay, so that's what I will be looking for on these levels on lower time frames. Okay, so just want to give you a tip on that. Okay, so now let's just go back real quickly and let's just say that when we got down into this 38.2 level, right? Our alert was hit. The market has broken past the 23 level. So my point B is confirmed. Okay, I have my point A fib right here. Point A fib, point B fib. And then now your entry level will be considered point C, okay? The only thing I'm doing with point C, or the only time I'm establishing this as point C, is essentially off of like an entry. But again, I will be analyzing lower time frame structure. And if this structure is favorable for a potential buy, then I would have entered the market somewhere in that range and been riding out the market, okay? So let's just say that we went ahead and entered, let's just say we entered the market somewhere in here, okay? We bought somewhere in there, okay? Once I've entered the market, my take profit then now is going to be, and I will get into risk and all that on another video, but for my take profit based on just purely FIB, not anything on lower time frames, nothing like that, but based purely on FIB, my take profits are now going to be the -27 right here. So I'll make this green. So that's going to be my take profit 1. And then my take profit 2 is going to be the 61.8. Now, the thing about those is that at this point, I'm holding the market until it does this. Comes up here and hits TP. To be honest, like I pretty much only hold trades towards the -27. I don't really look to hold the trade to the 61.8. That's just me. I feel like at that point, this trade to here is like a really good amount. I mean, even on this chart, this would be like, that's correct. Like, yeah, maybe about 300 pips, but that's just like a small, that's not the just example for this fib. But yeah, so I'm gonna hold it till the -27. That's like my ideal situation. So I'm not super concerned with the 61.8. You can hold it. Like once you get to this range of the take profit, -27, you could put like a stop loss in profit, like right here, and just say, I'm gonna hold this trade. Like I'm gonna hold the trade for as long as it wants to go. But if it comes back down here, it hits my stop loss in profit, then it'll take me out of the trade. I still won a lot, but I didn't. I was trying to go for the full 61.8. That'll be your own decision. But for myself personally, my only target really is just right here. I feel like I've done my job once that take profits hit. Okay. So let's just say like in a perfect world, you had the market came down to this 38.2 and it came down to the 38.2 and you were able to take profit. How would you go about proceeding to your next trade setup using FIB? Whenever you have a take profit that was hit, the same process that you had to get there essentially from the very beginning just repeats itself. So what that will look like is you have take profit was hit, right? So the same way I showed you down here, you had this resistance level was broken. Your point C now will become your point A. So your point C that you had, which is essentially your entry, is going to become your point A, your new point A. So I'm going to draw this level right here because we had another break of resistance so you can see it. Okay, and I'm gonna delete this here, delete that. So you have point A, point B, point C you created. I'll bring this back real quick. So you have the point A was here, it broke out of the resistance, so you grabbed your point A, you were trying to find point B through all these 23 levels, at 23 level. Finally, it came down and broke your 23, and then now it respected the 38.2. You took your entry, market came up, hit your take profit. So now you can now start plotting your new entry because you're trying to catch the wave of this entire trade all the way up. So you want to have more entries. That was one position. You entered, closed out. Now you're looking for a new entry, a new opportunity. So I'm going to go ahead and point C becomes point A. And then I'm just going to try to plot my point B now. I close out of this trade. I'm done with this fib. I'm going to start my new fib right here from point A, the exact same way we did this previously. And I'm going to delete this because I'm done with that, done with the take profits. And the same cycle repeats itself over and over again, okay? So say this is point B, the market goes up. Okay, I got to modify. I modified the fib. Market came down, broke past my 23, okay? Now that means that this is confirmed. Came up here, maybe retested. Let's just say it broke past the 38.2. We had a lot of bearish structure on lower time frames, so it didn't respect that one. We had the same thing past the 50. It came down to the 61.8. Boom. Let's just say it came down to 61.8. We had a higher low, then we had some breaks of resistance levels, then we had entry base point. Let's just say we took our entry, boom, took our entry somewhere in here. Market went all the way up to the negative 27. Our entry was our point C. The same process repeats itself over and over again. I would have simply said, okay, market hit our take profit. Let me go ahead and confirm that resistance level was broken. Point C becomes our new point A. Delete this, I'll grab my new fib, go point A. And then now I'm doing the same process. I'm looking for my point B again. And then once I find my point C, I'll enter the trade. So that's a bullish market, kind of a bullish market fib. I'll give you guys some bearish ones here in a second. But essentially just once that's the flow. That is the flow of the market, okay? So that is just the flow of how you use the fib on different levels, okay? So and like kind of like a bearish flow. Now, one thing I want to point out real quickly is what happens if, oh damn, no time for the Trojans. What happens if you have a market that does something like this here? Let's just say that you had your point A, right, drawn up, and your point B, and the market comes down, breaks past the 23, comes up, breaks past the 38.2, breaks past the 50, breaks past the 61.8, breaks past the 78.6, comes down to your last and final PRZ level, which is the 88.6, doesn't break that, and then it comes down to your original point A. So this was your point A. This was your point B up here. And this was your point B again because it broke the 23.6 and it officially broke that. So now you can establish that is your true point B. You're trying to find point C the entire time and it never did. And it got all the way back down to your point A. And then it breaks your point A. Once it breaks your point A, this fib is no longer valid. Okay? So once your point A was broken, that fib level was no longer valid. Okay? You cannot count on that fib level to be valid any longer. Essentially what this means is if this was a bullish market and it breaks your point A, then it's like the market might be transitioning into a bearish market. So now you're not looking for buys because your point A has been broken. So it's almost like I don't want to risk looking for more buys. Let me go ahead and see if I can just get out of this market and try to find a much better position, or I might be transitioning completely into a bearish market. Let's go ahead and see if that's the case. So that's what you're going to be doing if your point A is broken, okay? So just keep that in mind, okay? And same thing for like we'll get into a seller's market here in a second, but okay, so that's pretty much it for fib and like a bullish market. That'll be part one. I'll make a part two video for a bearish fib, and then part three of the fib training is going to be how you go about using the fib for like how you go about using fib on the actual chart, okay? So that's gonna be the end of this one. I'm gonna go ahead and do a bearish one here in a second, and then part 1, part 2. But that's pretty much how you use a fib. This is gonna be used on every single trade you take, so make sure you practice this and understand kind of what's going on with the market in this flow. But yeah, I'll catch you guys here on part 2. It'll be a little bit shorter for part 2, but part 2 will be bearish, and then part 3 is gonna be, like I said, the candlestick analysis, applying the fib on the actual charts.